Hey guys, hope everybody's doing well today. Welcome back to the channel. If you're new here, please like, share, subscribe, do all that good stuff. And down in the description box below is all my affiliate links that you can help support this channel. I would appreciate it. Those that have, there's been somebody buying a bunch of stuff on Amazon. I appreciate that so much. I will be doing an income update on YouTube and affiliate income here shortly. So those that are doing it, man, big thumbs up. I appreciate that. Also, this video, we're talking about JEPI. We're talking about the dividend cut. And we're just going to go over JEPI for those people that don't know about JEPI. We're going to do, I'm going to give you my opinions about how it's doing and how it's going to be. I mean, I'm no, you know, I can't tell the future, but I'll give you my opinions at least. Also, if you guys didn't know, JEPI is now on M1 Finance. And M1 Finance has a great promotion. If you're not part of the M1 Finance app, down in the description below, if you use my link and deposit $100 of new money into an M1 Finance account, M1 Finance will give you $30 and me $30. That's just a win-win situation. You can invest in JEPI or whatever you'd like. Well, not whatever. M1 Finance kind of limits things, but big selection of stocks, ETFs over there, and closed-end funds over there on M1 Finance. And if you use my link, you'll be $30 richer, and so will I. All right, so got that out of the way. So we are talking about JEPI today, and JEPI's first payment here in, or is it the second? I'm not sure. Might be the second payment of the year. Was a reduction. Okay, now let's take a look at it. Now if we look here, this is on dividendinvestor.com, and our subscriber Chad down in there in the comment section below, he always sends these to me. He's a huge JEPI fan, and so am I actually. And here we go. January 29th, 2021, they declared a dividend in the amount of 26.3 cents. Previous dividend amount was 54.3 cents, which was the month prior. Now, I know most people will look at this and say, JEPI cut their dividend. And I'm going to tell you right now, they did not cut their dividend. You're looking at me like, what are you talking about, GW? It's 26 cents now. Well, they are paying out what they earn. So if they earned 54 cents last month, they paid it out. They earned 26 cents this month, and they paid it out. Now, especially a lot of my viewers who know about all these income funds such as QYLD, they compare JEPI and QYLD like apples to apples, and they are completely different in the way that they operate. And we'll go over the prospectus of JEPI here pretty quickly, and I'm going to just try to highlight a few things for us and try to get us a better understanding, and then I'll end up with my opinion. So if we move over to the summary prospectus, I'm going to just go over some highlights here if I can remember where they are. I tried to get prepared for this one. You guys know I usually don't. Usually right off the top of the head, but I tried to prepare a little bit for this video. So basically, JEPI, the investment objective of the fund is to seek current income while maintaining prospects for capital appreciation. This is the first thing that makes JEPI and QYLD different. QYLD does not have this section of their prospectus of their, what they're trying to achieve. They don't care anything about capital appreciation. Okay. So this is an important one here. The fund seeks to provide the majority of the returns associated with the fund's primary benchmark, which is the S&P 500 Total Return Index. Now, people usually stop right there, right? And they go, oh, it should be right up there with the S&P 500. No, we have to keep reading. We have to take the entire strategy into context here. So when it says that, it says, comma, while exposing investors to less risk through lower volatility and still offering incremental income. So what is incremental? Incremental means in addition to, like, add on, the S&P. If you look at the benchmark of the S&P 500, you're only getting about 1.5% yield. Well, the JEPI is giving you incremental income on top of that. So how does JEPI do this? So they create a portfolio of equity securities with a lower volatility level than the S&P 500 index, and also investing in ELN. So this sounds more to me like we should be looking at it like comparing it to like a SPHD, the low volatility fund that uses S&P 500 stocks. Okay. Now they also do it in gets income from ELNs. Now what's an ELN? Let's take a look at it. I'm just gonna read what an ELN, how they operate. Okay, the basics. I don't know exactly what ELNs JEPI is invested in, but this is the mechanics of an ELN. So ELNs, how ELNs work. This is on Investopedia.com. In the simplest form, a $1,000 5-year ELN could be structured to use $800 of the fund to buy a 5-year strip bond with a 4.5% yield to maturity, and then invest and reinvest the other $200 in call options for the S&P 500 over the 5-year life of the note. Now, it's not just $1,000. I mean, JEPI has millions of dollars in these things. But there is a chance that the options will expire worthless, in which case the investor gets back the $1,000 initially put in. If, however, the options appreciate in value with the S&P 500, those returns are added to the $1,000 that will eventually be returned to the investor, all the while getting 4.5%. Okay, so they're more like debt instruments or fixed income instruments with a call option involved in it. So it's very complicated, but that's how they generate a lot of the income that they get every single month, because they do 20% of the total portfolio are invested in these ELNs. Let's see. There's one other thing that I wanted to go over here. So, like I said, they create a portfolio with a lower volatility level. So usually with a lower volatility level, you kind of give up the upside, but but not necessarily. When I see lower volatility, I think value stocks, right? So value stocks, low volatility. They're investing in dividend funds. They got 20% going into ELNs. And there was one other point here that I wanted to get into. If the fund is successful in providing lower volatility, then the value of the fund's portfolio will fluctuate less than the S&P 500 index over a full market cycle. That's important. A full market cycle, typically a 3 to 5 year time horizon. The fund may receive income to the extent it invests in equity securities of companies that pay dividends. However, securities are not selected based on anticipated dividend payments. So what I read here typically a 3 to 5 year time horizon. What I read here is we are judging this thing way too early. We have no idea. We're comparing it to the S&P 500, or we're comparing it to QYLD, or we're comparing it to, all these other funds when there's nothing like it in the market. There's nothing like it. There's nothing to compare this to, because you don't have a 20% ELN, 80% dividend value stock portfolio ETF out there. Okay, so that's it. How ELNs work, we went through that. Now I wanted to go through this is as of December 31st. It's not that far off, but we look at the JEPI Performance here, and since inception, 18.29%, and the S&P 500, 27.71. So it's lagging by about 9-10%, and that's over 6 months. That's not a big deal. We got to come back to this thing in 3 to 5 years. So we look at the portfolio. Those who don't know, JEPI has a 0.35 expense ratio. It is an actively managed fund, so 0.35 for an actively managed fund is quite low. We'll look at the portfolio. 98 holdings. They have a turnover ratio of about 13%. Over here, top 10 holdings, these are the ELNs. And then we'll look at the next 6. You got Microsoft, Google, Target, NextEra Energy, Amazon.com, Accenture. I looked at all the holdings, and they're top-notch quality holdings. Let's see if it'll just pop open real quick. And we'll go over about, the top 10 or 20. And here we go. Eli Lilly, Accenture, Intuit, Thermo Fisher Scientific, AbbVie, AutoZone, Allstate, Charter, T-Mobile, MasterCard, Bristol Myers, Kimberly-Clark, Costco, Johnson & Johnson, Berkshire Hathaway. They're not invested in junk companies. Procter & Gamble, Pepsi, Honeywell, Progressive, Merck, Lowe's, Medtronic, Verizon. So, very good portfolio assembly we got going on here. In the sector exposure, 8% in communication services, 8.5% in consumer discretionary, 10.5% in consumer staples. Very low exposure to energy at 0.4%, 9% in financials, 11% in healthcare, 9% in industrials, just under 13% in information technology, materials, and 2.4%. Other, which are the equity linked notes at 20%, real estate 2.5%, utilities at 7.1%. That's not available at -1.2%. I'm not sure what that is. I bet it has to do with cash or cash collateral for options or something like that. That's what I'm guessing. Okay, and now what is my opinion? My opinion is I'm sticking with JEPI. I am sticking with JEPI, and there's another one that I'm sticking with too that we will probably talk about next week, because we look at dividends and capital gains here. 49 cents back in July when it made its first payment, and then 28 cents, 45, 43, 51, 49, 54, and 26. Now, a lot of people say, well, QYLD didn't reduce their dividend. Like I said, not apples to apples. QYLD, though I like the fund, cannot be compared to JEPI, as QYLD is paying out more money than they earn. Okay, that's correct. They pay out more money than they earn. They've adopted a 1% monthly distribution. That's fine. but they're paying out more than they earn. So eventually, that could catch up to them. That could eventually. JEPI, to me, is the more responsible play here, where JEPI looks at their portfolio, looks at the income they've received, and distributes it to the shareholders. They don't say, oh, well, we paid 54 cents last month. Let's just go ahead and pay 54 cents again, even though we didn't earn it. That's what QYLD does. Now, I still hold QYLD, but JEPI is my bigger portfolio holding, and that's because of the portfolio and the long-term capital appreciation that I noted over here. That is a long-term 3 to 5 year market cycle. I believe in the 3 to 5 years that JEPI will do what it's supposed to do. So hope that answered some questions, probably sparked some controversy. Leave me a comment down below. Give me your thoughts. This JEPI versus QYLD, it's apples to oranges, but a lot of people lump them into the same category. So leave me your thoughts down below. Like, share, subscribe. Use those Amazon links and that M1 Finance link. Get your $30. JEPI's on M1 Finance. You guys have a great weekend. We'll talk to you later. Thanks. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.